Let me now bring on board Mr. S.L. Narayanan, Group CFO with the Sun Group, who joins us live from Chennai. Mr. Narayanan, good morning. Thank you for joining us. Let me start off with something which is of immense market curiosity. What is the status of stake sale in SpiceJet? First we heard no, then it was a yes, then it was perhaps. Now I hear maybe.
Nikunj, actually it will be very, very difficult to give any kind of statement on this because of the various sensitivities involved. We are not supposed to indulge in any kind of encouragement of a speculative frenzy which has already gripped the entire sector. It's not just us. Everybody who's in the industry seems to be doing some deal or the other, and every other day there are denials and counter denials. So I think we should just leave it at this time. The good news is the industry is doing a lot better, which is perhaps the reason why more and more investors from abroad are also taking a slightly more favorable look at Indian aviation players.
But Mr. Narayanan, I mean, what's the stage currently? Are you still exploring a buyer, or can we expect a deal, anytime soon?
No, in fact, this is something which needs very careful elaboration, because it is a fact that we will need capital in the future. There was a certain capital expenditure plan that was drafted a couple of years ago, at which time the industry was growing gangbusters. And then we had this extraordinary situation where everybody was losing an arm and a leg. And then we had the capacity rationalization, fares adjusted. So the whole industry is looking at a slightly more modest rate of growth, perhaps single-digit growth rates and not the 15-16% growth rate that we thought would continue for at least the foreseeable future. And therefore that capex plan needs to be recalibrated. But net we would still require additional capital. So we will be evaluating several options, including, looking at a possible strategic investor, but nothing is happening at this time. And because there's been a favorable development with respect to FDI flows, there have been more than just, curious, phone calls. So somewhere, that has been misinterpreted to a deal which is in the offing, which is not.
You are certainly at the exploratory stage at least, right?
Yeah, everybody is looking, and what cannot be denied is the extraordinary size of the Indian market. And as I said on your channel some months ago, even if India were to grow at 5.5% GDP, it is reasonable to expect a whole new class of customers coming into the addressable market. I think it would probably grow at 8-9%, consistent with the empirical data that we've seen in other developing economies.
Assuming you don't get a foreign partner or you don't resort to some capital infusion, given the growth dynamics and your capital requirement, are you on course to grow independently?
Yeah, in fact, if we were able to pull it off, and if the company were to generate substantial cash surpluses, obviously we wouldn't want to dilute, because then the existing investment becomes a lot more valuable. And unfortunately, this industry is not able to attract debt capital like other industries in the infrastructure space are capable of attracting, simply because of the kind of negativity that surrounds this whole sector. So given the dynamics of that situation, and given the fact that banks are not very favorably disposed to lending, we have to rely almost totally on equity financing. And in fact, even if you look at our own balance sheet, the working capital loan is almost like quasi-equity, because it's fully collateralized by the promoters' backstops, by pledge of shares. Thankfully, because of the improvement in the share price, the pledge ratio has fallen considerably, which has of course given a positive sentiment to the whole SpiceJet investment thesis. But I think in the foreseeable future, we will probably still have to rely on equity capital. And we would like to get in a strategic investor if conditions are conducive and it's in the interest of every stakeholder.
But I would imagine not at 40 rupees, because at 40 rupees, it's hardly attractive. It's not a market cap of even $2 billion.
No, I think we are just talking exploratory point. I think price probably will be the last. I'm getting feelers from the aviation ministry that the domestic airfares are high and the ministry is worried about it. I came back on a SpiceJet flight 2 weeks ago. I ended up paying something like 7,000, something I've never paid in the last 3 years. It's hurting me now.
Nikunj, I paid.
And my co-anchor is saying it's cheap. I mean, I got it cheap. She in fact paid more than 7,000.
Nikunj, with greatest respect, let me submit that all of us have had a fairly good time traveling across the country at incredibly low fares, and that was simply not sustainable. I mean, if you were to look at the kind of fares that you paid 10 years ago and then you index it to inflation, the number that you'll be looking at will be something absolutely outlandish. In real terms, the price should have been something else, because price of oil was something like $20 in 2000. It's $110 today. Many of the costs that the airline industry bears are denominated in US dollars, which used to be had for something like 34, 35 rupees. And today it's at about 55 rupees. I think the prices have simply not kept pace with the realities of this industry, and which is why all of us were in the kind of distress that we saw in FY12. So I think people should get used to paying somewhat higher fares, and this is not an industry which is making supernormal profits. It is just barely come out of an extremely disastrous situation, and it'll be extremely unwise to conclude that fares are very high and therefore need to be regulated. I wouldn't agree to that surmise at all.
What about the IPL franchisee then, Mr. Narayanan? Because it seems like steps towards the IPL franchisee buy are now sort of firming up. There isn't a material expense in FY13 or the same, but will we see it eat into your bottom line in FY13?
No, FY13 there'll be absolutely no impact, because the season actually starts in April. So we will see some kind of first year loss, which is no more than 50 paisa per share. I mean, I'm just taking the total cash loss for the first season. The impact on EPS is going to be less than 50 paisa per share. That we will see in FY14. And in FY15, we hope to break even, because one important development that's happened is the title sponsorship amounts. I think it's roughly doubled between the erstwhile sponsor and the new sponsor, which is Pepsi. So I think the franchise itself will become more and more valuable as the years go by, because this is a great platform for advertisers to reach out to mass markets. So I don't think we are going to have any difficulty making a tangible profit out of our IPL venture.
Mr. Narayanan, final question. I know we've extended our appointment with you, so at the liberty of asking one more question. Final question is on Sun TV. The phase 1 of digitization has been a resounding success. For 2013, what do you expect to hear, when it comes to digitization, and how will the future projections for Sun TV will change because of phase 2 of digitization?
Yeah, actually, in the first phase, which is Chennai, we think Sun TV's subscription revenues will move up by roughly 2.5 crores to 3 crores per month, because there's been a massive conversion from analog to digital in the city of Chennai. In the second phase, I think it's basically Bangalore, Hyderabad, Vizag, Coimbatore, Mysore and Cochin. I'd expect double that number, because I think the number of homes that we're looking at is about 3 million plus. So we could see somewhere around 5 to 6 crores additional subscription revenues per month to Sun TV. At Sun TV, I think it's our moment in time. This is something that all broadcasters have been waiting for. Finally, it's happened, and we're most grateful to the government for the extraordinary resolve that they've displayed in making sure it happens this time.